Welcome back to Commodity Champions, and this is a crude oil special where we have seen prices very volatile. With our guests, we of course have discussed on the supply side of it, but let's talk about the demand now. And Azlin, coming to you first, what is your sense with the global trade disputes going on and they seem far from sorted? Do you think that could be one of the factors that could weigh on demand?
I think that there is going to be, basically demand, we see demand in the second half of this year still quite strong. But basically if the trade disputes continue and escalate, then obviously, and the US currency remains high, then there is a big risk that will have an impact on demand for oil from the emerging countries. So I think that there's still some uncertainty about how much of a demand dent this could be. There will be some, but it'll probably be felt more in 2019.
That's a fair point. Thomas, coming to you, for the consumer countries like India, while of course it has been about the currency play, the kind of depreciation that we've seen in the Indian rupee, the crude oil price is holding where they are, and of course the Indian petrol diesel prices have been hitting all-time highs for much of last fortnight. What is your sense as India being marked as, seen as the highest global growth demand country? Do you still see, with the current scenario, that as a situation that would continue?
Well, I think we're seeing kind of around the world higher prices really start to weigh on demand growth. Maybe most obviously in places like the US. But that is certainly one reason why we're kind of relatively bearish on demand over the next couple of years. The other reason is that we expect quite a sharp slowdown in major oil-consuming countries over the next 2 years, so 2019 and 2020. So I kind of agree that demand is likely to remain strong in the second half of this year. But in 2019 and 2020, we're likely to see a very kind of sharp slowdown, and oil demand growth being significantly weaker than it has been recently.
Amrita, what is your sense for many of the consumer countries? Do you see the currency play start weighing in? Because as Thomas says and as Azlin says, even with the higher prices, there's a very tough chance that we will see guzzlers like India actually see any decline at all in imports.
No, that's absolutely fair. And I think the important thing to bear in mind is that the currency effect, a lot of countries are actually shielded from it. Not India, but look at Indonesia, for instance. Currency is depreciated significantly, but the government has it subsidizes pump prices, so the consumers don't even feel the impact of it. I'd say particularly with regards to Turkey, if it becomes a bigger contagion issue for Europe, then there is going to be a big risk. Beyond that, it is going to be quite contained within a couple of countries. The trade war is a much bigger headwind to global economic growth, and I think that's the one worth watching, because unless and until that de-escalates, there is a risk that overall global growth slows down. Now, to try and counter that effect, China is actually embarking on a mini stimulus project, effectively. And I think that's why Chinese demand has suddenly picked up quite substantially. Gasoline markets there are incredibly tight. We've seen gasoline and diesel cargoes being imported, which hasn't happened in years. But the real issue over here really is the trade war, and we have to monitor that.
Oh, well, absolutely. Azlin, what is your sense with what's going around in the global markets? What is your sense? Because I was reading some reports that India import dependence right now is 80 to 85% and can go up to 90% in next 3 years. With the kind of situation that we are in, would you still see the India growth demand continue to be the best in the world?
Actually, I think that the higher prices, probably at where we are, there shouldn't be a big dent in the India demand growth, because we are expecting that the India demand growth is going to be very strong this year and probably next year, and even China. So I think that maybe if prices stay around, when we're talking about Brent, if prices stay around the $75 to $80, there may not be a big a huge impact in terms of the demand from the emerging markets like India. But if we do see prices going up towards the $90 or $100, which I think is very unlikely, in the next 6 months or next year, then I think that will have a big impact. But I think that for now, we're expecting that India demand growth will still be quite substantial.
That point is well taken. So all of you really are of the point that we're not looking at the prices run away too much. But in that sense, Thomas, coming to you first, what is the sense on prices for the coming quarter now and for rest of 2019, if you have worked on anything like that? Because for a country like India, where we have seen the rupee go the way it is, the inflation concerns are quite back, the country's economists are talking about an interest rate movement here, and of course the US dollar. How are you looking at all of those macro scenarios now? Because that really seems to be taking some precedence.
Yeah, so we kind of think that prices are likely to remain within the current range this year, so between 70 and 80, unless we see a substantially larger than expected reduction in exports from Iran. But in 2019 and 2020, we think that substantially slower economic growth, mainly in the US, but globally, is going to lead to a significant weakening in demand for oil. We don't think that the dollar is going to play a major part. We don't see that much change there. But substantially slower growth, combined with the easing of logistical constraints in the US shale regions, means that we expect the market to be in a bit of a surplus next year, which should push prices back down. And we've penciled in $60 for Brent by the end of 2019.
Oh, well, that's an interesting one. Thomas, one more thing. How are you looking at the US dollar index going forward? Because I'm assuming you are studying that too, because currency is a strong play now. Yeah,
we think that most of the appreciation in the dollar has already happened, but we don't think it's going to fall back majorly. We've got it stable over the next couple of years, so it doesn't play a major part in our oil forecast.
Amrita, same question to you really. How are you looking at the crude oil prices for the rest of 2018? How do you see 2019 span out? And also your sense on the US dollar index?
So I would say that 2018 is the real risk, right? Like I was saying, there's the immediate lack of spare capacity is a concern, because also ultimately some waivers will be given, but before those waivers are given, companies and countries are going to be super cautious and cut back more. So it's really the tightness comes through for Q4 18. So we've always held that $80, $85 price forecast for Q4. We're going to hold on to it. If anything, there's upside risk to that. Next year, the first half of the year will be extremely tight, particularly as Iran goes off the market. But second half, from Q3 onwards, you should start to see more U.S. production coming through, because right now they're completely infrastructure constrained. And then you're going to get more production from Saudi Arabia, UAE as well, and Russia. So that helps a little bit. We've already got a pretty weak demand profile for next year, only expecting growth of about 1.2 million barrels per day year on year. But, the real risk over here to the upside is IMO 2020, which is the bunker specification change that's coming through from 1st of January. And you will start to see the market trading and pricing that in from the second half of 19. You're effectively going to get a significant boost to demand, because fuel oil prices have to go down, and you're going to see power generation pulling in oil again. It's complicated, so I don't want to necessarily go into this for everybody, but the reality is that IMO 2020 is going to be quite bullish for prices, because we are going to get more demand for oil, and particularly clean products such as diesel and gasoline. And that's going to offset a lot of the kind of increased supplies, and I think that's definitely one to watch out for.
All right, so plenty of concerns outside in the market there and uncertainties as well. But one thing that our experts are on page one is about stronger crude oil prices and more volatile in this year. Next year, second half, of course, is a time that you could see some more decline continuing in case of the crude oil prices. But until then, a consumer country like India really will have to be on the edge with the kind of other global cues as well that we are facing. With that, Azlin, Thomas and Amrita, thank you so much for taking time out for us today and discussing the most important subject that the country is watching, and that, of course, is the crude oil prices. With that, that's all the time that we have on Commodity Champions. Thank you for watching.